Hey guys, good morning. It's Sunday, just going over doing the week ahead. And so I always get asked, like, what's my opinion for the week as far as the direction of the market? And sometimes I have one and sometimes I don't. Let me just show you exactly what I'm looking at now. In front of you, this is the Vix tool. You can learn more about it on the website. We use this all the time. For those who are not familiar with this, there are 4 different lines. We have the 9-day Vix. We have a 30-day Vix, 90-day Vix, annual Vix. That's what it's showing. If we go back here during like the initial stages of the pandemic, as they shot up, the 9-day is the one that got really expensive relative to its peers. If you could see in the data box, the 9-day here is 106, the 30-day is 82, the 90-day is 67, but the 1 year kind of stayed at 41. Now, it's really interesting what's going on right now because we have a major event coming in November, right? We have the election. Obviously, there's a lot of stuff going on right now, but the real key is going to be the election. So for market direction, guys, I'm death staring this. I am all about the relationship between the different VIXs. You can see here, 9-day 26.33, 30-day 26.87, 90-day 31, 1 year 33. Now, if you go back and watch the video I posted, which was titled Crazy Options Trade, I did that trade just because the 9-day really started rallying. Once the 9-day really picked up, that becomes very bearish for the overall market. Now that they're selling off, it becomes somewhat bullish. So let me show you exactly what I'm looking at. If I hit the beaker here, still on the Vix tool, I'm going to show this bottom study. I'm going to take off everything. And all I want to show is VIF-VIN. That's the only thing that I'm going to show. Now here's VIF against VIN. Now what does this tell us? Well, VIF-VIN is going to be far-term VIX versus near-term VIX. And this is about 23 days and 37 days. So this will give you pretty quickly what's going on between shorter-term VIXs and longer-term. And if we start by watching this, then after I go and watch this. But now watch what I'm going to do. Hit the beaker here. I'm going to compare this, and I'm going to compare it against S&P futures. Okay, now I'm going to put it down below. I'm actually going to not show the top study because I just want to show the VIN and the VIF relationship against the S&P futures. The purple now, guys, is the S&P futures. We could squeeze it. We could look at more data. Now again, the green is just the difference between the near-term VIX and a further out VIX. A 23-day VIX against a 37-day VIX. You can see it right here, VIN to VIF. Pandemic hit, look at the green line. Near term got way expensive relative to further out. And you can see the market pretty much moved lockstep with it. Same kind of thing here, green starts to sell off, which means that near term is getting more expensive to the far term. The market sells off. Same thing right here. Well, now it's kind of peaked its head higher. What I'm going to do as far as direction for the overall market is I am death staring this green line. It's pretty straightforward. If this green line, which is the difference between the VIN and the VIF, 23 days and 37 days, rallies all the way back here, well, I'm going to get back to be bullish the overall market because I think the S&Ps will follow. If this continues to go lower and trades down here at all, you can see back here, just the market will get crushed. The market will get crushed. Same thing as we rally, the market will rally. The trade right now is all about volatility, guys. It's all about timing. Get away from just the purely technical analysis. Be creative. The election's a big deal. So we have to follow the different VIX timeframes to see if we're bullish, to see if we're bearish. That's what I got. Jonathan Rose, owner, Masters in Trading.